Good morning, everybody. Welcome to Morning Markets on the 15th of April. A couple of things from our morning meeting that I wanted to share with you today. The first of which was looking at the IMF, the International Monetary Fund's World Economic Outlook, which was published in the last 24 hours. What we've seen there is that the IMF have taken a stab at trying to forecast the impact of COVID-19 on the global economy. Clearly a very difficult task given the very many moving parts that we have at this point in time. But I think the key point from the report is just the magnitude of lost output that we will experience in 2020. The IMF suggests this could be some $9 trillion of output that is lost. To put that in context, that is equivalent to the output of both Germany and Japan combined. So a significant hit to the global economy when viewed in that sphere. I think the other important thing to take from that is just then, if we compare and contrast that magnitude of lost output with the size of the economic stimulus, both fiscal and monetary, that has been injected into the system and will be injected into the economy. Both of those factors are aimed at stabilising the economy, but also helping them navigate that period of lost output. And whether it's coincidence or not, the numbers are comparable in terms of the overall size of stimulus versus that of lost output. The second thing that we touched on today and builds on what we've been discussing over the past number of days is just the increasing number of companies that are reporting earnings. So just looking at two of the large US banks that reported yesterday, JP Morgan and Wells Fargo. And the key thing to take away from those is both the uncertainty of the current environment and the impact on their businesses, but also the strength of their businesses in the sense of their underlying profitability and cash flow and balance sheet strength that allowed them both to set aside quite material provisions to deal with loan losses that may occur in the future, with JP Morgan, for example, setting aside $6.8 billion. Finally, today, the other thing that we just touched on briefly was further stimulus from China. And this builds on a number of changes that they've been making in the financial system over the past couple of weeks, with a reduction in the medium-term lending facility rate and also a reduction in the reserve requirement ratio that banks need to hold. So those both aspects add liquidity to the Chinese economy. We'll get a better insight into the impact of COVID-19 in the Chinese economy with first quarter GDP numbers that are published on Friday of this week. And then finally, just turning to markets, overnight we saw strength in the US with all of the indices in the US closing up above 3%. That didn't feed through into Asia, and in Europe at this point in time, futures are sort of suggesting a rather subdued opening. So we'll see how the market evolves today from an equity perspective. And then looking at bonds and currency markets, there's very little change overnight. And I think that signifies one thing, that the volatility that we've been experiencing over the past number of weeks has been gradually subsiding, and that speaks to the amount of liquidity that's been provided starting to have an effect in the financial system. Thanks for watching, and I look forward to seeing you again tomorrow. Thank you.